Here's what's coming up on the Peak Financial Freedom Show with Jim and Dan.
Mathematically, there's a high probability you're going to run out of money, and there's also a high probability you're going to go through more big losses in the stock market, because a lot of people say it really doesn't happen all the time. The market doesn't crash. Well, you go back to 1929. There's been 13 times the market has gone down an average of about 39.5%.
But when you get close to 60 or in your late 60s or 70s, you have to change the game up because you can't lose what you've earned. You don't have the recovery time.
You might think you only have 5 or 10% risk in that portfolio. You might have 30, 40, or 50% risk. So you need to find out right now what risk you're taking so you can then modify your portfolio, reduce the risk, and feel a lot more comfortable and not worry about your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, I'm Dan Ahmad. My partner Jim Files and I are co-founders of Peak Financial Freedom Group. We are proud sponsors of this show. As investment advisor representatives of our own RIA, we are legally bound by a fiduciary duty to our advisory clients. Specifically, we owe our advisory clients an affirmative duty of utmost good faith, requiring us to provide full disclosure of all material facts and obligating us to employ reasonable care to avoid anything misleading. We design customized written retirement income plans for retirees and soon-to-be retirees. If you've saved a lot of money for retirement and don't want to lose it, don't want it to run out, and don't want to make a mistake with it, stay tuned. You're going to love the show. We want to help you protect your assets against large stock market losses, earn competitive returns without taking excessive risk, and create dependable monthly income that will last for as long as you live. Our goal is to help you stop worrying about your money so much by building you a customized written retirement income plan. We put everything in writing. And here's the best news. We will not charge you for your plan. You will never feel any obligation or pressure to work with us. It's always your choice. But if you do decide to become our client and you're looking for some growth without taking excessive risk, we get paid advisory fees on the money we invest for you. If on some of your funds you're looking for protection against stock market losses and need dependable lifetime income, and we use an annuity as part of your plan, we are paid commissions. That's why we don't have to charge you additional planning fees to create your customized, comprehensive written retirement income plan. Before you invest any money with us, we will tell you all the fees you will pay in writing. We believe in transparency. And after we build your plan, you won't worry about your money so much. So sit back and enjoy the show. Thanks for joining us.
Hi, and welcome to this week's AskPeakNow.com, where you, the Sacramento area, email your questions into us, and we answer them right here on the show. Guys, you ready for your questions? Dan, I'm going to begin with you, and it's Robert from Roseville, and he writes, Hi, Dan. I've been reading a lot lately about how much risk mutual funds have and how high their fees can be. People talk about it, but there aren't a lot of solutions offered. I just retired after 35 years as an engineer, and it seems logical to me that if I take too much risk or pay too much in fees, my money could quite possibly run out. I no longer want to take as much risk as I used to, and I want to know what my fees are. What do you suggest?
Well, Robert, that's a great question that you sent to us. And I think a lot of people in your position are feeling the same way because they're really worrying about multiple things. One, risk. They're worried about fees. They're worrying about making sure they make the right decisions so that they don't ruin their retirement. And you being an engineer, you want all the details. It's the only way you can start to feel really comfortable about your money is in the details. And you're right, mutual funds out there right now, there's a lot of fees. And people talk about it, but there really aren't a lot of solutions. So let's start there. What we do is we would do a mutual fund analysis. We call it a fee audit. We'd want to look at every single mutual fund you have. We put it into our system, and we are going to be able to tell you the exact fees you're paying on the mutual funds. Those expenses that you have associated with the fund itself, we can then estimate some trading costs that goes on in the mutual funds. By the end, you'll know exactly what you're paying, and then you can find out and determine, is that too high? Same thing for your risk. You want to make sure you know exactly at this point in your life what risk you're paying. We will do a risk audit, kind of like a cardiac stress test for your portfolio. We'll enter in every single holding you have, the mutual funds, the stocks, the bonds. It will then come back and tell us, in 2008, if we have another 2008-like stock market crash, what would happen to your portfolio? How much you would lose? You might think you only have 5 or 10% risk in that portfolio. You might have 30, 40, or 50% risk. So you need to find out right now what risk you're taking so you can then modify your portfolio, reduce the risk, and feel a lot more comfortable and not worry about your money. And it really comes down to putting an entire plan together for you in writing. You need to make sure you know what's going to happen over the next 30 years of your retirement. You need to know how much income you can get, how long it's going to last, the taxes you're going to pay, the risk and fee analysis. If you have beneficiaries and you're married, how the beneficiaries will be treated to make sure they're taken care of the way you want, and then have everything put down in writing for you. If you had that, I promise you'd stop worrying about your money so much. So, Robert, great question. We hope to be able to answer some of these questions for you. You can always call the office. We'll be glad to help you.
All right, my next question is for Jim, and it's from Jennifer in Granite Bay, and she writes, I've had an advisor for 15 years, and I really like him. I think of him as a close friend. I've told him that I want to take less risk, but I seem to lose a lot when the market goes down. I've also asked for a plan, and he's told me he would get one for me years ago. I've also asked what my total fees are, and he constantly says around 1%. I'm retiring in 24 months. I don't have a plan, and I'm worried about losing money. I feel guilty about looking for a new advisor. What do you think?
Well, Jennifer, those are great questions, and those are questions that you need answered right now at your time in life. Going through retirement can be very difficult if you don't have the answers to those questions. And it's okay to think of your advisor as a friend, and they should be friendly to you. But that's not what you hired them for, and that's not what you are trying to get out of that advisor in the form of skill sets. You need to understand those questions that you've asked, and he needs to answer those for you, or if not, you need to seek a second opinion. Obviously, that's what we do at our firm. Number one, when you're concerned about risk, that is a very great concern because nothing matters in a plan unless you indeed understand the risk you have, how much you could lose in the next market crash. Because if you lose it, it's not his money, it is your money, and you may never recover. So that's the most important ingredient you need to understand in this recipe file that you've created with your questions. Number two, you have to understand the fees you're paying. You can't get out of fees when you're investing in the financial industry. You're always going to have fees. But comprehending how much you're paying now and hopefully being able to reduce those in the future could have a significant impact in your long-term gains that you have or your portfolio value. Typically, we see when a client comes in seeking a second opinion and we do an analysis for that client, we often see fees above 2%, sometimes even 3%. You mentioned your advisor saying that he's charging you about 1%, but that might be his fee, but there's other fees inside your portfolio that you may not understand. If you have mutual funds, for example, in your portfolio, those fund companies do not work for free. You're paying a fee for that, and there's some other miscellaneous fees. So it's very important for you to get an answer to that question. And then when a portfolio is remodeled to meet your objectives, same thing has to be done. You have to understand the new fees, and the goal is, can you get the fees down? Because every time you drop your fees, it puts more money in your pocket. And lastly, you want a plan, and that's very important. And I know your advisor seems to be putting you off, and there's a reason for that, because that's not his skill set. That's not what he does. If he did that, you would have had a plan before you even invested your money, because you shouldn't invest your money any place unless you know how your money is going to behave, what that money is going to do for you, where your income's coming from, the taxes you're going to pay, what assets should you withdraw from in retirement to lessen those taxes, how much you're going to leave to your beneficiaries. There's a lot of real key things that you need in order to be successful in retirement. And without those answers to those questions that you've asked, you're blindly running through retirement. So seeking a second opinion is very prudent. It's going to be super valuable for you. And I really appreciate that question, Jennifer, and thank you very much for calling in.
Dan, Jim, thanks so much. And I also want to thank Robert and Jennifer for those wonderful questions. Hey, would you like to have your questions answered here on the show? It's really simple. Just go to askpeaknow.com and we may answer them right here on the show. Don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Are you worried about taking too much risk, paying high fees, creating dependable monthly income, your money running out? You can stop worrying about your money by meeting with a full-service retirement planning firm, not just someone who invests your money. Call right now to receive your free, no-obligation Peak Retirement Navigator review that includes a total fee audit, a risk stress test showing your potential losses, a retirement income analysis showing how long your money will last, and the steps to create a customized written retirement income plan. Our clients typically have between $1 million to $20 million of assets, but if you've saved at least $500,000 for retirement, we will meet with you free of charge to see if we can possibly help. You'll get free educational copies of Mama's Secret Recipe for Retirement Success we co-wrote with Jack Canfield from Chicken Soup for the Soul, and our beautiful, inspiring 100 Shades of Financial Freedom. So don't wait. Call the phone number on your screen right now. You have nothing to lose, there's no pressure, there's no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, and welcome to this week's Retirement Roundtable. Gentlemen, we have a great topic today, and essentially what it is, Dan, are things in the retirement financial world that maybe you shouldn't trust. Sort of like gas station sushi, for instance.
That's a good one. I would never trust that. Kind of like the same thing I'd never trust my brother-in-law from giving me a stock market tip. You just can't act on those things because you're not sure what's going to happen on the back end.
You know, it's funny too, because how often, Jim, have you heard somebody come in and they're giving or they're taking advice from someone who is A, non-licensed, and B, really shouldn't be talking about retirement?
You know, everybody's an expert, right? And we say that all the time. They go to the internet, they talk to their neighbor, they talk to their brother-in-law, and they think that's gospel. But in order to get proper advice, whether it's in the financial service industry or you're going to a surgeon, you need to go to the right people.
And one of the things I love at Peak and working with you guys for so long now is the attention to detail. I always like to say, show me the data, right? Because if you can't show me the data, how do I know, Dan, that that's going to be a good decision?
Well, I think right now in today's times, everything has to be put in writing. If it's not in writing, you can't trust it. When you buy a house, it has to be in writing. You buy a car, it has to be in writing. You get married, it's in writing. You have life insurance, it's in writing. But in retirement or investing, no one ever has all their data in writing. And if it's in writing, that's the only time you can trust it.
You know, I love that too, because it is all about the written plan. Somebody who's going to take the time, put the energy in to show you, you know what, we care. We care about you having a great retirement. And I've seen your package that you give to folks that come in, and well, it's quite robust, Jim, isn't it?
It is robust, but a lot of time goes into it, and a lot of skill goes into that as well. And most of the industry won't spend the time to do it, nor do they have the skill set to do it. But we spend an enormous amount of time in education ourselves, making sure that we do everything prudent for every single client that comes in, and we put everything in writing. And when you put it in writing, what happens? We become accountable, right? And we just don't tell somebody something, we put that in writing.
Accountability. Imagine that, Dan. Someone being accountable to the advice that they gave you. So how often would you say somebody comes in and you ask them, do you have a written plan? How often do they say, yes, I do?
Well, we always ask that because we know what the answer is going to be. In our over 50 years of combined experience, we've seen approximately 3,000 people for first interviews. Out of that, less than 5 people have had written plans. It's been 2 people out of 3,000 have had an actual comprehensive written plan that had a retirement income projection, a tax projection, a legacy projection, and all the advantages and disadvantages signed by their advisor in writing. 2 out of 3,000. Think about what that means.
Well, I'll go one step further. You know, there are a lot of advisors out there, guys, and correct me if I'm wrong. They're very talented in helping you accumulate the dollars that you need to get to retirement. Unfortunately, Jim, this is the time that you need a specialist to take all those dollars because the last paycheck from work may have already come or is coming soon. And guess what you got to do now? You got to distribute those dollars, right?
That is a great point. You know, you have to go from asset accumulation to asset preservation in income distribution. 2 distinctively different stages in retirement. And people that are in asset accumulation are people that are younger, right? 20, 30, 40, they're making contributions to their retirement plans. But when you get close to 60 or in your late 60s or 70s, you have to change the game up because you can't lose what you've earned. You don't have the recovery time.
Dan, is it fair to say that since we're talking about trust right now, you got to have a plan because the plan is what we're going to trust. That's where the accountability is going to be. Fair statement?
100%, because if you don't have a plan, you're basing your entire financial future on 2 things, hope and luck. And how many people want to be retired right now, looking at the next 20 or 30 years, thinking everything about their financial security is based on hope and luck? Get it in writing, make sure the advisor signs it. It's the only way you know what's going to happen. And for most people, it's the only way you're going to eliminate the worries every single person has about retirement right now.
Dan, Jim, thanks so much. Hey, if you're looking for something to trust, get a written retirement plan. Don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Do you have an actual plan, or do you just receive statements from where your money is invested? Too few retirees and pre-retirees don't have a plan and are not prepared for retirement. A great way to get a clear, written retirement plan is to meet with a full-service retirement planning firm, not just someone who invests your money. If a clear, written retirement plan is something you want, be one of the first 5 callers right now, and you'll receive our Peak Retirement Navigator review. Here's what you'll receive from your Peak Retirement Navigator. Number 1, a fee audit exposing your direct and hidden fees inside your portfolio. Number 2, a risk report showing you how much you could lose in a market decline. Number 3, a risk analysis to protect your investment from large stock market losses. And number 4, an income plan showing you how much income you will need in retirement. So don't wait. Call the phone number on the screen right now for your no-cost, no-obligation Peak Retirement Navigator review, which includes your Retirement Survival Toolkit. You have nothing to lose, there is no pressure, there is no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, and welcome to this week's Is Your Retirement in Jeopardy? Gentlemen, are you ready?
Yes, we are.
Dan, a blatant and widespread practice in the financial industry that, if done in almost any other industry, would be criminal.
Mark, what is your advisor lying about your fees?
Money.
And that's important because think about it. Right now, no one knows what fees they're paying right now. And their advisor can say, oh yeah, you're only paying about 1% in fees when you might be paying 2, 3, or even 4% in fees. That could kill your retirement. So I think that's a really good question.
And that could never happen, right? That never happens in the office.
Oh, not in the real world.
Jim, are you ready?
I am.
Okay. The old school Wall Street strategy that tells people it's acceptable and recommended to lose money in the stock market on purpose, even if it means the losses of hundreds of thousands of dollars, even millions of dollars.
Mark, what is the outdated recommendation of writing out the market?
Money.
You know, people have been taught over the years by Wall Street to stay the course no matter what happens. If you're young enough, that might work. But if you're getting ready to retire in retirement, that probably won't work. So you have to be really careful about that.
And Dan, you're my wrap-up. Are you ready?
I am.
Here we go. When common math just simply doesn't add up.
Mark, I believe that to be when you have to make a bigger gain recovery-wise in the stock market just to make up for a smaller loss. It's kind of like new math. We were talking before about kids and they come to us for homework help and they show you that new math stuff. It just doesn't work. It's kind of like the same thing in the stock market. If you can imagine, you lose 50%. Seems logical, seems fair. You only need a 50% gain to break even. When you lose 50% in the stock market, like 2000 to 2002 or 2007 to 2009, you need a 100% gain just to recover. Not to make any money, but just to recover. That's why I just don't think it adds up.
Guys, thanks so much. Hey, is your retirement in jeopardy? If so, give us a call in the office or go to our website. And don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, I'm Dan Ahmad, president and co-founder of Peak Financial. We are a full-service retirement planning firm, not just someone who invests your money. We build customized, written retirement income plans. Have you been able to get good information on how to plan for a safe and secure retirement? Probably not. Well, we wrote the book to change all that. It's titled Mama's Secret Recipe for Retirement Success, and we co-wrote it with Jack Canfield, who wrote Chicken Soup for the Soul. We're biased, but we think it's the best book currently available on how to plan for a safe and secure retirement, teaching you the truth about risk, the stock market, fees, creating dependable lifetime income, annuities, and a full written retirement income plan. Our clients typically have between $1 million to $20 million of assets, but if you've saved at least $500,000 for retirement, our book can help you. So don't wait, call the phone number on the screen right now. We'll give you all the secrets and it's free.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Welcome. This week on Peak University, we're going to talk about the 2 stages of money in retirement. This was a topic we covered in detail in our latest best-selling book with Jack Canfield, and the book is titled Mama's Secret Recipe for Retirement Success. I'm here with my partner Jim Files, and we're going to discuss one of the most important aspects of what you need to learn to make the best decisions with your money during retirement. So Jim, why don't you start with describing stage 1 of retirement planning?
Well, Dan, stage 1 is called asset accumulation, and that's where most people are right now with their retirement assets. That is, while you're working, you're making a salary, you don't need income off your assets, you can take risk, you can actually have market losses because you have recovery time. But as you get closer to retirement, Dan, what do you have to change to?
Well, you have to shift, or what we call transition, from stage 1 into stage 2. And stage 2 of retirement planning is called asset preservation and income distribution. That's very important to switch to these sides because when we go through how these both work, they're completely opposite of each other. When you're in stage 2, it's when you're pre-retired and retired. So maybe you're 5 years away from retirement or you're already retired. You have to now make sure you understand, and I'm sure you're well aware of, you're not making a salary anymore. You're not getting those dependable monthly paychecks month after month that you're getting by working. You no longer are investing on a monthly basis like you were in your 401k or your 457 or your 403b. You need maximum security to your assets, to those proceeds. Can't take much risk. You want low volatility. You really don't want to see the market doing this every day. You require minimum losses because you don't have the time to make back up large losses now that you're retired. You need income right now. You have to have your income started because you need to rely on that income. You want maximum income guaranteed for as long as you live, and you need a written plan. It's mandatory. You put every single thing about your money in writing. So Jim, if you look at then transitioning from stage 1 to stage 2, how many people, how many retirees or pre-retires that we talk to come in and are actually prepared or have transitioned properly from stage 1 to stage 2?
You know, Dan, it's really interesting because we do this every single day, and we have people coming in seeking a second opinion on a daily basis to our firm. I can count on less than 3 fingers how many times I've experienced somebody doing the transition correctly. Because the industry has taught the consumer to stay the course, be in the asset accumulation stage, take the risk. Hopefully you can pull income off that, but it's maybe income. There are 2 separate, distinctively different stages of retirement planning here. Stage 1 is where you've been between 20 and 50, maybe even 55. But when you get close to retirement, Dan, as you suggested, you have to make that transition. You have to go to asset preservation, and you're going to go to income distribution because you save these assets your entire life, not to look at them and not to take a bunch of risk with them. You've already done that. You've saved these assets so you could use them for income to supplement your other income sources in retirement.
When you have to look at it, what if right now you're sitting there, you're watching the show, and you right now qualify for all the things in this box? You're not making a salary because you're not working. So how does that make you feel? Does it make you feel safer, or does it make you feel like you have things to worry about? Most of us worry if we're not getting paid our salaries. What about if you're no longer saving money on a monthly basis? That never makes us feel safer because you got here simply because you saved money month after month, and now think about it. You're not saving month after month. It doesn't feel comfortable. How about if you now look at trying to get maximum growth on your assets? You know what happens when you try to get maximum growth, you're taking maximum risk, which means you have to be willing to lose what the stock market will do if you're trying to take that type of risk. And you have to go back to 2001 and 2, 2007, 8, 9. How much did the stock market lose in both those time periods?
Over 50%. So if you had your money in the S&P 500, which is the 500 largest companies in North America, you likely lost 50 or 55%. You may say, well, I was diversified. I had bonds in my portfolio. Well, you may have, but you probably had small cap stocks, mid cap stocks, international positions,
emerging markets,
REITs, emerging markets, developed countries. Those take on more risk. So just because you have bonds in your portfolio doesn't mean you have less risk. You could have the same amount of risk as the general stock market because you have other types of assets behaving differently and more aggressively in a bad market.
When you got to think about now, go back to 2001 and 2, 2007, 8, 9. Think about how much you lost. And now you're retired. Do you really want to go through that same exact type of negative events again? And the answer is no, because if you lose something like 50%, Jim, So imagine you got $1 million, you lose 50%, you're down to $500,000. What type of rate of return must you earn on your $500,000 just to get back up to even? Not to make any gain, just to get back up to even.
Well, this is what's called fuzzy math in our business, right? If you lose half your money, 50% in your example, Dan, you actually need 100% rate of return to get back to even, not 50%. Because if you have $1 million and you drop down to $500,000, 50% rate of return on $500,000 is only $750,000. You have a gap. You need 100% rate of return. And Dan, how hard is it to generate 100% rate of return on your assets?
It's difficult. Over the long haul, maybe 15, 20 years, that can happen. But during retirement, if you lose 50% and now require 100% gain, what if you're now taking income off of those assets and paying fees? It's almost impossible to recover. And you just can't put yourself in that position right now that you're in retirement time.
That's right, Dan. And if you're taking 4% or 5% income distribution off your asset, if you're doing that at $1 million, let's just say it's 5%, make the math easy. 5% of $1 million is $50,000 a year. All of a sudden the market drops, you lose half your money. If you're taking $50,000 off of $500,000, now you're taking 10% off. What if this market stays, or the next market crash stays at the bottom for a long period of time? Is there a likelihood that you'll run out of money?
Mathematically, there's a high probability you're going to run out of money, and there's also a high probability you're going to go through more big losses in the stock market, because a lot of people say it really doesn't happen all the time. The market doesn't crash. Well, you go back to 1929. There's been 13 times the market has gone down an average of about 39.5%. So that's 13 times. It doesn't sound like a lot. That means it happens approximately every 7 years on average, and you just can't put yourself in that position to go through a 40% loss every year.
And Dan, look at the data right now. We've been in the longest major bull market run in American history. The market has gone up for 11 consecutive years. What is the likelihood of us having another market crash? You have to look at the data. We're not predicting when the crash is going to happen, but markets will reset.
When you just have to protect yourself to make sure you don't ride through that loss again. If you have any other questions, you need any help at all, feel free to call us at our office number or go to our website and grab as much information as you need.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Do you have an extra plan, or do you just receive statements from where your money is invested? Too few retirees and pre-retirees don't have a plan and are not prepared for retirement. A great way to get a clear, written retirement plan is to meet with a full-service retirement planning firm, not just someone who invests your money. If a clear, written retirement plan is something you want, be one of the first 5 callers right now, and you'll receive our Peak Retirement Navigator review. Here's what you'll receive from your Peak Retirement Navigator. Number 1, a fee audit exposing your direct and hidden fees inside your portfolio. Number 2, a risk report showing you how much you could lose in a market decline. Number 3, a risk analysis to protect your investment from large stock market losses. And number 4, an income plan showing you how much income you will need in retirement. So don't wait. Call the phone number on the screen right now for your no-cost, no-obligation Peak Retirement Navigator review, which includes your Retirement Survival Toolkit. You have nothing to lose, there is no pressure, there is no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hey guys, great show this week. Thanks so much for tuning in.
If you need any additional information, just call our office or feel free to visit our website.
And remember, at Peak Financial Freedom Group, we fix your money.
The preceding program is sponsored by Peak Financial Freedom Group.